Success is simply a matter of luck. Ask any failure. Earl Wilson. Our success here, 10 to 15 minutes a day, that's all we ask. If you will do that, my friends, practice trade when the opportunity presents itself, work hard to show yourself approved, study these things, do our daily video trainings that we put out, you can and will do this. You will do it. It will take time. It will take energy. You will learn the nuances as you practice by doing, and it will come to you. Again, doesn't cost you anything to practice trade. We're not a stock calling service. We're an education firm. Let's jump into these charts. You will see something I added today. Just doing a little experimentation. I put in the 4-hour trend line. I put that in as a purple line on our charts, and we'll watch that, see what we can learn from that as we move forward. How did we end the week this week? Price percent oscillator still heading down strongly, not quite as much as the prior week. Derivative oscillator still gaining downward momentum. We have a solid green down candle. We call that a slowdown in the down movement. Markets down for the day. S&P 500, 3.20%. Only thing up for the day was bonds. Gold was down also. We have a green, solid green candle. And again, price is below the weekly trend line, above the current 2-day trend line. 4-hour chart is going up. So we're going to go from the weekly to the 2-day on the S&P 500. And we're going to look at that 2-day chart. Hasn't crossed over going up yet. It's pretty much flat on the price percent oscillator. Derivative oscillator still losing downward momentum. What does that mean for us? Well, the Wednesday, Thursday 2-day candle was up. The Friday 2-day candle, again, it's not complete. It's 1 day into the 2-day candle. Look at the high there, 260.81. The high previously 262.80, so $2 off the prior high so far. So slowing down in that up movement. Price percent oscillator flat, still negative. Derivative oscillator still negative. Now let's look at that 4-hour chart. What do we see there? It's broken the 4-hour trend line, and we see a red spinning top in the morning, green spinning top in the afternoon, almost a hammer. We see a little wick at the bottom, long wick on the top. So it popped up, and then we see that price movement settling out. Again, it did pop above the 4-hour trend line, so we see that in both candles. But where it settled out shows us a sideways slide. Price percent oscillator still going up about the same angle it had been the prior day. And again, well, at the end of the prior day. And so what we are looking for happening possibly is this market going to roll back? Even with the news of the $2 trillion in federal stuff and all, market's going to do what the market's going to do. Can I tell you what it's going to do on Monday? I can't. Can I tell you what I'm looking for? I'm looking to see if this market has moved up all it has for the time being and is going to roll over sometime this next week. It may do that. If it does do that, then of course I'll look to get into a practice trade on a reverse fund, an inverse fund such as SH, which is a simple inverse. It's just a one-time inverse. Nothing too dangerous, although everything's dangerous with the kind of volatility we've seen. Something for you to practice trade on the S&P 500. Now, it's been going down for the last few days. Why? Because the underlying fund, the S&P 500, has been going up. If you look back, though, you can see where it went up quite substantially as the S&P was crashing. It went up quite a bit. In fact, it's set to go up the same percentage the S&P goes down. Now again, it's an inverse fund. Take our training on inverse funds. I'll put it in the video somewhere. You can see it at the top of the top right-hand part of the video. You'll see it. You can also find it at our YouTube channel, Inverse Funds, How to Make Money When Markets Crash on Practice Trades. So I want you to have that. Now, let's move from the S&P 500 to the Nasdaq 100 on. We'll start as we always do on the weekly chart. We also have a special training in the video, in the show notes that everybody who subscribes is going to get, backtracking, using stock charts to find trading patterns. Folks, that's what we do all the time. What are we doing? We're looking historically at what has happened in the past, helping us get together and figure out what is going to happen in the future. So again, backtracking, that's a great training video. Those of you who are subscribers will see it in your show notes. If you're not a subscriber, go to chartingwealth.com for free sign up. What do we see the week ending? Again, a green, solid green candle. That again is the slowdown in the down movement, plumbed lower lows throughout the course of the week. That was on Monday. It lost a little bit of downward energy on the price percent oscillator, derivative oscillator, gained downward momentum, still heavily down. The overall feel in the market, all things being equal, the market tends to move in the direction of the largest chart, which is the weekly. So the downward pressure is there, and it is immense. 2-day chart. Going up a little bit, still negative, but that price percent oscillator looks like it's going up ever so slightly. Derivative oscillator losing downward momentum. Curious candle that we see drawing. It is a red open box. Don't see that a lot. What does that mean? Again, means that a slow down in the up movement. It's the opposite of a solid green candle. So again, showing you some significant slowing there on the 2-day candle. So pay close attention to that. Remember, 2-day and weekly are still down. Now we go to the 4-hour chart. What do we see there? We can see where things blew off. The Q's Nasdaq 100 down a little bit more, about 0.5% more than the S&P 500. We see some down movement in the morning, and we see sort of settling out in the afternoon. Did hit a higher high. We see that the price percent oscillator's losing energy since it peaked back on Thursday afternoon. That's the derivative oscillator. Price percent oscillator is flattening now. Again, what are we looking for? A rollover, crossover going down sometime this next week. If that happens in the morning on Monday or Tuesday or Wednesday, if it does, then of course you'd look to get in that afternoon when that morning candle closes. Happens in the afternoon and you can see it certain, you would look to get in right there at the close around 3:55 in the afternoon on a practice trade going down. What's the inverse for QQQ? That one is P, Papa, Sierra, Quebec. PSQ, that's the ProShares short. There are others, okay, folks, there are others. There are also, there's 2 times and 3 times. The QID is 2 times this going up. So again, you can get these exponential funds. It means you're taking just a lot more risk. And again, we're just practice trading here. So practice trade with something that's a little safer to learn with, okay? So again, not a stock calling service, education firm. Look for that over the course of this next week. Might give you an opportunity if the market crosses back into negative territory. That will only be if that 4-hour chart crosses over going down. Otherwise, it may just continue to move up. Back to the weekly, we're going to go to 20-year bonds. Look at this chart. We see that, again, bonds peaked out way, way higher. 179.70. Those of you that were in that bond up trade, I know you killed it in your practice trade. It was beautiful. And when we look at what happened over the course of this week, we see a down wick there showing some downward pressure. We, of course, had much more up movement there. We have a green, even though it's a small open box green candle, it is up movement. Look at that price percent oscillator heading up. The derivative oscillator, however, peaked back on the 16th and is continuing to lose momentum. That is what we call our leading indicator, not a lagging indicator. And so we will pay attention, take that as it may. I want to show you why I drew this green line in here. We'll get to that in a minute. As we look at the 2-day chart, you can see on the 2-day chart, it crossed over going up back on the 24th. I had a successful trade, as I told you guys about that day. When that occurred, I in fact jumped in at the close of that candle and was able to capture a chunk of that beautiful 4% up movement. I wish I'd gotten 4%. I got 2%. I put in a good till canceled sell order. Had other stuff to do, like we all do. Wasn't watching the market all day. Put in a good till canceled limit order. I was up and out at 2%. Could have made 4, but I'm happy with the 2, my friends. Happy with it. Took that money, was thankful for it. Thank you, good Lord, I took it. So what do we see going on now? Well, we see that two-day chart spiking up even more, derivative oscillator losing downward momentum. That's pretty to see. What do we see on the 4-hour chart? And this was something, I put this in because I looked at where we peaked out before, right around the 66, 69 mark. I think it was 68. So 166, 69, 166, 68. Hit that a couple of times. Wanted to see if we would go higher than that. Look at where we hit. We hit right there on it. Found that curious. Again, we did not have a trade with that crossover on the 4-hour chart going up because the 2-day hadn't crossed yet. So again, our trade was a 2-day recross. I jumped in, took what I could take from it, and it has moved up, did throughout the course of the day, move a little higher than it previously had. So again, if you had trusted yourself to that 2-day recross and stayed in, even though it got a little scary, it would have rewarded you handsomely. And again, how do we deal with these raging markets? Carefully. Again, lower your order size, again, to protect yourself from overall losses. If you are worried about all the volatility and just can't absorb it, it is scary. That is why, my friends, you need to be practice trading this to learn it, to learn how to deal with the concern, with the fear, with the volatility. You just got to do it. And this is a great, great time to practice trade and learn this. This is one of the best times to practice trade because it is so volatile, so dangerous, so fascinating, and so much to learn. So please make sure that you're not just listening, but you're practice trading. Okay, so looks like bonds are continuing to move up. We'll see with this line I drew here, again, wanting to see if this were a potential ceiling. If indeed bonds bounce off this on Monday and start heading down, that would be more likely. If stocks continue up, we would expect bonds to lose that momentum and head down. But again, if bonds continue up, push through this strongly, that may very well tell us that stocks are either down or headed down, and that more money's flowing into bonds as people are retreating from the stock market. May very well reflect itself in lower stock prices. We'll see. So let's watch. Now, lastly, we go to gold. What do we have for you in gold? Gold down for the day 0.65%. We did in the week with a green up candle. Again, long wick on the bottom, actually a little bit longer than the thickness of the candle itself, and a long wick on top, maybe 2.5 times. Gold peaked out at 155.66, a low of 142.28. Derivative oscillator still gaining downward momentum. Price percent oscillator negative, heading up a little bit. So we'll continue to watch, keep our eye on gold. I can't wait for gold to flip over going up, my friends, because I want to get into gold. I want to buy it, but I'm not going to buy it until the signal's right. Look at that 2-day chart. It's trying to cross over, and we'll see what happens there. How is it so far? First day of the latest 2-day candle. You can see that the high is 153.55. So far, it's not reaching the 154.81 high on the prior candle. It's a red open box. It means, again, a slowdown in the up movement. So we'll wait and see how that plays out. Again, want to see that 2-day crossover, and then then the weekly follow it. 4-hour, take a look at that. 4-hour chart in gold, crossed over going up back on the 23rd, boomed up big time on Tuesday, and then's really gone sideways since then, friends. Was hoping it would really continue to spike up, would pull the 2-day and the weekly over quicker. Hasn't happened yet. Gold may be getting ready to move back down again. So pay close attention to that. Why is that important? Because the 2-day and the weekly are already primed for gold to go down. So we'll watch, we'll see, we'll pay close attention. Friends, that's where we are as we end the day. Hey, I appreciate everyone that's been buying our book. That helps us out so much, Charting Your Way to Wealth. I'm continuing to work on optionable wealth. We did send out to all of our subscribers this last week episodes 1, 2, and 3 of Options Made Simple, the Charting Wealth Way. Thank you for all the wonderful comments on that. I know that has helped so many of you for the first time understand what options are all about so you can start practice trading those. We'll put that out again soon. Need to be a subscriber. Go to chartingwealth.com, sign up for free. Also, for the new Patreon supporters who appreciate the work we do here and want to help us pay for some of the cost with the bandwidth and the other stuff we do, thank you for your support. We have all sorts of special things for you guys. And of course, when the new month kicks in, we will be having our live question and answer call-in session. I know it's going to be fascinating. That'll be in the second week of April. So again, if you want to be a Patreon supporter, sign up. We so appreciate it. Any three of the levels, we will put you into that live question and answer training session. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Follow the links for all these things in the show notes.